The U.S. dollar certainly pulling back, as we can see, and it is not really rebounding at all. It's still hanging out around $93 on the dollar index. You'll notice here that this is an area where we had had support, and we are kind of just hovering right below that area. Let's get a little closer in here and take a look at the U.S. dollar ETF. If you want to trade the U.S. dollar and you don't want to enter the currency or the Forex markets, you can always just buy an ETF. There's an ETF for that. There's always an ETF for that, isn't there? So there's the UUP ETF that you can buy the U.S. dollar, right? So you get instant access to it against a whole basket of currencies when you buy UUP. And you'll notice here that, you know, the overall downward cycle is just continuing. In fact, it's worsened, right? So nothing is getting better for the dollar here. In fact, it's now trading below its bearish channel, right? So now it's hanging out down here. So until we get back even into the bearish channel, you know, we're probably going to see some pain. Now, we haven't seen the kind of rally in gold that we would have hoped during this big sell-off. That's one of the things that Tom Cloud and I were talking about on this latest podcast when I had him on. But anyway, taking a look here at gold, we see the same problem. We have certainly broken out, right? We've broken out. We broke past this 1250, 1270 stubborn resistance. Now it's support. We're hanging tough right here at the 1295 to 1305 resistance, and it's serving pretty much as a strong resistance right now. We do have a position in UGLD in addition to our core physical position in gold. UGLD is up slightly since we've bought it. But overall, we need more strength. We need more volume here to see gold catapult higher. It may just take more fear, right? We may just need more fear. Okay, let's switch gears here and move into our latest trading ideas before we move into our training today. First of all, let's take a look at Adobe. Adobe, one of our top trading ideas that we have had, now breaking out nicely. Now breaking out above this 150.42 breakout zone. Real nice support at about 143.81. This, as we've told you, has been a monster. It really respects its 14-day EMA. Look at that beautiful, beautiful support. Just riding right along its 14-day EMA. A little slip back to the 50 provides you a nice buy signal, right? And look right here. What happened? Well, people stepped in to buy. How come? Because it was a swing trade opportunity, wasn't it? Dip, come right back. Now it's riding along its 14-day. Yeah, slips right there. What happens? Big money. Oh, we get a little bit of a sell-off there. Some people think, well, that might be the end. Certainly have a lot of resistance there. 143.81 acted as an area of resistance prior. You can see the pullback to the 50. A little bit of a problem there. Pull back again to the 50. People weren't sure what to make of it, but it broke out anyway. And then you can see here that we came up to this new area, and now we're bouncing off of the 50, and we're doing it all over again. So a nice breakout here, 150.42, very low volume, relatively speaking, going back for the last several months, indicating that, you know, maybe this rally might be a little tired, right? So this is a breakout entry. It doesn't mean that it's going to provide a huge gain, but long term, Adobe has really provided stellar gains so far year to date. Taking a look at Alibaba, it's I say it's a new position trade. It's actually been in our position trade portfolio since the 19th of May. It was one of our position trading ideas. We actually took a position in Alibaba at 123.22. Just another quick refamiliarization, I guess, with IPOs. We do not trade IPOs when they first break out, when they first come out. We stay away from IPOs for the most part. We tend to wait for the IPO or for the stock to actually form some sort of pattern before we actually enter it. That has served us well. It's kept us out of a lot of bad issues. I know a lot of people were pushing for the Snap IPO, Snapchat. And we stayed out of that one, and we avoided the bloodshed in that one. But there's always a time to get in, right? You wait for the actual a pattern to form, and I usually at least want a 50-day moving average before I'll enter. So Alibaba was one that I was really excited about. Didn't buy it at the IPO, watched it soar in 2014, and it ran into 120 resistance, and then it came down and it just kind of really shook out all the weak hands, right? Kind of bottomed out down to 60, got cut in half, started coming back up, and then came right back to its previous 2014 high. It broke out right there, big volume. We said, let's take some of that. We went ahead and got some Alibaba, and it's running real nice. Look at that 14-day EMA. I think that's not the 14-day. This is a weekly chart. This would be a different moving average. But regardless, you can see how nice that rally really is running. Now a new all-time high this morning. Appears unstoppable. We've already sold half of our shares, right? We'll probably hold a little bit longer. This rally is very ferocious. Rallies like this don't last forever, but they will last for a while. Look at this straight up chart here. You can see, this is nice. It's nice to be in this, but you've always got to be watching it, because these usually don't end well, right? They'll usually have a sharp correction, and maybe it'll be a good time to add, right? But the point is that watch out. This straight up action won't last forever. So we've already taken gains off the table. We've already taken 50% of our gains off the table, right around 140, 150, somewhere in there. And now the rest of these shares will certainly be profitable, right? That's fantastic. So we've raised our stop loss, so we can't lose money on this trade. Fantastic.